I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we will help you learn to invest in 20 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name is Bryce, and for the second time in a very short space of time, I am not joined by my equity buddy, Alec Renahan. Unfortunately, he is MIA again. Circumstances have meant that he is not going to be able to join me on this episode. I can guarantee that he will be back up, firing, ready to go on our next one. He's very disappointed and incredibly apologetic that he can't make it. That's how life goes sometimes, and he will be back. The good news is we have another expert investor to bring you as part of our interview series, and so Ren does actually make an appearance in that. So you will be hearing his voice for those of you who are devastated that he's not joining us, and we're worried that you wouldn't be hearing his dulcet tones for a second week in a row. So have no fear, he will be joining us. So before we jump into our amazing episode that we're bringing you today, just a quick shout out to the Thought Starters crew. Those of you who have signed up to our weekly email, awesome. Those of you who haven't, jump on to our website on our homepage. You can sign up to our Thought Starters email. We only send out one email each week on a Monday morning, and it is designed to give you a way to procrastinate better on a Monday. We'll send you articles that have piqued our interest, all things investing related, and a lovely curated news section that Ren takes a lot of time to do. So sign up. We also send you articles that are basic 101s specifically for the beginner. So we don't send you any spam. Jump on, sign up. It's an awesome way to start your Monday. Speaking of awesome, we, as I said, have an interview to share with you guys today, and this is one we've been trying to line up for a long time now, and we are super stoked that we had the ability to get him on. So, I mean, how often do you come across someone who has graduated from university and then is given the job of managing the money of UBS, one of the biggest investment banks in the world? Then this person went on to become vice president of Morgan Stanley, another massive investing bank. He was then managing director of derivatives at the Galleon Group, and then president of the $400 million hedge fund Cramer Berkowitz. But if that wasn't enough, our guest then started Minyanville Media, which was an Emmy Award winning financial media company, and is now founding partner and chief investment officer of CB1 Capital, which is an investment manager that specialises in the supply chain of cannabinoid-based wellness solutions and products. He is the king of pot on Wall Street, has appeared on Fox, CNBC, CNN, and is published in the Wall Street Journal, Business Week, and Fortune. And we are super impressed with his CV and very excited to have him on the show. His name is Todd Harrison. So we discuss all things pot related with Todd, marijuana. He knows so much about it and is one of the pioneer investors in Wall Street at the moment in the space. So we start with a bit of information and background of what it was like to start your career in Wall Street and then win an Emmy Award and then move into talking all things pot. So we hope you guys enjoy it just as much as we did.
Todd Harrison, thanks for joining us.
Oh, thank you. Thank you for having me, gentlemen.
To kick it off, we got to ask about a letter that is pinned to the top of your Twitter. And I guess I want to read one sentence so our listeners get a flavour for it. And I quote, "He was incompetent to the point that the firm incurred losses of several millions of dollars and was sued by no fewer than 48 of our clients." So we got to ask to kick off the interview. Can you give us the story behind the letter? Is it real? Is it fake? Is it a joke? I'm sure there's a good story.
It's a real letter. It's a real letter on Morgan Stanley stationery from circa, I think that was 1990. It was a gag. My manager in Morgan Stanley in London handed that to me just to play a gag on me, and then handed me a proper recommendation letter thereafter. But I came across it a few years later, and I just, to get something like that on Morgan Stanley stationery is a bit of a coup.
Absolutely. So, Todd, you've had a pretty extensive career on Wall Street, Vice President Morgan Stanley, MD of derivatives at Galleon Group, and then going on to the hedge fund Cramer Berkowitz. So I guess before all that started, we'd like to just get a bit into your background. So what got you really interested in investing?
Well, when I was in college at Syracuse University, I did quite well in two courses, accounting and finance, and I ended up working for Morgan Stanley in London in between my junior and senior year. And it just got completely tooled on by the traders. My job was to bring the trading breaks to these traders on the floor, and I just got completely abused. And by the time I came home from London, I no longer wanted to crunch the numbers. I wanted to generate them.
So, Todd, from your time in Wall Street, what's something that people don't understand about Wall Street and how it operates?
Yeah, it's a great question. I think, I would ordinarily say the human element behind it, because the Wall Street I grew up with was very much a relationship business, but with upwards of 70% of trading done by the computers these days, I don't know if that answer still flies. But I do think as a common denominator, I do think Wall Street remains a relationship business, and a lot of good people got a pretty bad rap over the course of the last decade, I would say, after the global financial crisis. But a lot of good people on Wall Street.
So speaking of people on Wall Street, what's one of the major characteristics that you noticed amongst some of the more successful traders on Wall Street?
I would say discipline, first and foremost, really just to stick with your process, whatever that process may be. Much easier said than done. Even, I'm 30 years into this, and I could point to 13 things yesterday that I did wrong. But over the course of time, you want to stay true to your process and stay true to your discipline, and that should get you through any market.
Yeah, definitely. It's a good lesson, and it's something that we keep hearing from the people that we interview about, trusting your process, staying disciplined, sticking with it. Over your time in Wall Street, are there any other really important lessons that you've learned, or that anything that you've observed from other investors that you think is really important to be a successful investor?
Well, I think what I would say is not just for investing, but for life, and something my grandfather taught me and something I try to teach my kids, is that all you have is your name and your word. And you got to stay true to both of them. And I think on Wall Street, or in life, once you breach that confidence or that trust, it's very difficult to get it back. So I just think it's paramount, on Wall Street or anywhere, to maintain your integrity. We live in a bit of a post-truth world, more on my side of the world than your side of the world. But for what it's worth, I think things like integrity and character still matter, even if it's not something that seems to be winning right now in the world.
In your time on Wall Street, I'm assuming you would have had to have dealt with not only some large wins, but also some losses along the way. And I guess one of the hardest emotions for beginners to get over is the fear of losing money, particularly when you're sort of starting out. So how did you deal with that feeling, going into Wall Street as a junior? And then was there any sort of particular strategies that you used to overcome that fear?
It took me a long time to figure it out, but once I realized that you very rarely score goals when you're skating on your heels, as I tell my son when he plays lacrosse, or as I tell folks who are trading, if you're playing not to make a mistake, or if you're trading not to lose, you're probably going to lose money or make a mistake. But you have to stay on your toes. You gotta be aggressive. You gotta trade to win. You gotta play to win. You'll miss shots, you'll miss trades, you'll lose money. But again, if you go back to your discipline and you go back to your process, I think over the course of time, you'll be much better off.
Todd, we read a quote from you that we found interesting, and we're hoping that you can shine a light on it. So the quote is, "The hedge fund community has evolved into 10,000 people standing in a circle, shooting each other, looking for the same stocks." Can you explain what you mean by that?
Well, I think we can all, probably less so now than it was 2 weeks ago, but you have a lot of people hanging in the same in the same stocks, where, whether that's FANG, Facebook, Amazon, Apple, Netflix, Google, I don't think that there's much of an edge, even in my strategy, which we'll touch on as you start to get to the more liquid and the more widely held names. I think your relative edge decreases in kind. So as we, look at our strategy here on the cannabis side, certainly there's a bit of a capital flow process that we watch, which we can talk about if you'd like. But certainly as you go down, as we call it, downstream on the cannabis trade, it's a lot less crowded, and we think that's where you could find much more of an edge.
So before we do get into the cannabis side of things, we just want to briefly touch on Minyanville, if that's how it's pronounced, because you're an Emmy Award winner, and that's something I would assume is pretty unusual for a Wall Street trader. So you left Wall Street to start Minyanville in 2003, I believe. And to kick this conversation off, can you explain to our listeners what Minyanville did and how it led to you being an Emmy Award winner?
The backstory for that, circles back to when I was managing Cramer Berkowitz. It was a $400 million fund. And I was asked to fill in for my partner Jim at the time and write a column or a trading diary, as the case may be, in the Y2K in 2000. And I did it. I actually enjoyed the synthesis and connected with the audience. And over the course of time, I really just took to writing as a synthesis for my thought process and really an accountability. Something that I could look back on and self-check mechanism. So after 9/11, I was down there. I saw some things which I wouldn't wish on anybody, but certainly changed my outlook in life, changed my thoughts about what I felt was meaningful. Certainly the difference between having fun and being happy was something that was really crystallizing in my mind even before 9/11. But after seeing what I saw and the people holding hands and jumping from atop the towers and all the rest of it, I decided that I wanted to do something more meaningful, and I started a digital magazine, a financial magazine for lack of a better word. This was before there were blogs and certainly before social media, and had at it for a good 15 years of educating people and empowering people to make better and more informed financial decisions. And we did that, I thought quite well. The economics obviously changed with the democratization of content, and really just there was no barrier to entry anymore, which just completely destroyed the model. I sold parts of the business, and one of the things that we had done, just to circle back to the Emmy, we had branded the Wall Street Bull and Bear, and the idea was, as I would talk through the lens of, the bull and the bear, because there's always a bull case and there's always a bear case, and that residual grist is what you'll read about the next day in the Wall Street Journal, but it's also where education is found and it's where profitability is found. So we brought those characters to life. We animated them, and they won a couple of Emmy Awards, which was exciting, but at the same time, certainly not the type of reward you see on Wall Street. But it looks good on the on my mantle, and it has zero revenue attached. So it is consistent with the new age digital model.
Fascinating.
But it was really just to continue. It was during that time that I came across cannabis. I think it was 2012 when I went on TV and called it my single best idea for the next decade. And certainly early by a few years, but nonetheless, I think the market's starting to catch on to what we first started to see, and then obviously in the last 5 or 6 years really focused on efficacy-driven solutions and plant-based efficacy, and now with the biosynthetics and some of the other approaches, we think this is disruptive healthcare. Certainly there's going to be two sides to this market. On the one side, you'll see the nutraceuticals, you'll see the beverages and the consumer packaged goods. On the other, we think you'll see this, these efficacy-driven solutions that are going to do everything from promote wellness to, we think, cure disease.
It's probably a good time to introduce CB1 Capital. So you've started this fund to focus on investing in cannabis and cannabis-related businesses. And it stems from that quote that you just mentioned, that cannabis would be the single best investment over the decade. So to introduce our listeners to this concept, can you explain why you thought it would be the best investment over a decade, and then also why you created a fund solely focused on that investment?
Sure. Well, to be honest and to be candid, I was wrong when I first started to look at this, or at least misguided in that I was really looking at the social utility, whether that would be the tax revenue or the job growth or the crime rate or the prison population decreasing. It just made a lot of sense to me. And as I really dug down and started to do the work, was really just fascinated by the things that I found in that the American Medical Association was prescribing cannabis as medicine back in the 20s. This was very much part of the protocol for physicians back in the day. What happened were that some of the elite at the time, the William Randolph Hearsts and the DuPonts, they perceived cannabis and hemp as threats to their industries. So they created a newfangled word called marijuana, and they moved to ban it. The American Medical Association did not know that marijuana was cannabis. By the time they found out, it was too late. But that started what's been an 80-some-odd year propaganda campaign by the U.S. government to really demonize this plant. And certainly that's created these unintended consequences, which we're certainly trying to capture as we look across the landscape now. And we see an arbitrage of time versus policy. We do believe this is efficacious, and this will go through the clinical process. We think it's an arbitrage of price versus institutional buyers, especially for U.S. names and Australian names for that matter. We have large Australian holdings. We think it's an arbitrage of perception. We think this is about getting well, but not about getting high. And then finally, we think it's an arbitrage of liquidity in that, this approach and that we're managing a strategy in the publicly traded securities. We are not a marijuana-related business. We are a healthcare fund. We're a wellness fund. We are just taking a rather different tact at the wellness market. But, to fully understand the potential here, you have to dig down a little bit into the science behind this, and the science is fascinating. When we set out to do this, my partner and I, we talked to everybody that we could find who knew about the research that was being done, and the feedback, the mosaic that was really painted for us effectively went something like this: in that over the last 100 years, we've gone from hunters and gatherers to desk jobs, and we've gone from eating processed foods and trans fats to eating processed foods and trans fats, and diet and heredity and exercise obviously all play a part. But over the course of time, the tone of our endocannabinoid system changes, and it's the belief system that is responsible, at least partly, if not directly, for a lot of the unmet medical conditions, a lot of the diseases that have manifested over the last 70 or 80 years. And to really understand, how this all works, our bodies produce endocannabinoids. It's a system. The endocannabinoid system was not discovered until the late 80s or early 90s, but we all have them. And if you have a vertebrae, you have an endocannabinoid system. And what that does is it regulates neurotransmissions within your body. There's been a fair amount of work that's been done on the endocannabinoid system, even though it's relatively young in terms of being discovered, 30 some odd years. But what was never really studied, except by a chosen few, whether it was in Israel or Italy or Spain or Europe for that matter, was that the cannabinoids found in cannabis are identical in action to the endocannabinoids that your body produces. So the ability to look at the endocannabinoid system as a retrograde pathway where you can target receptors throughout your body. You have the CB1 receptors in your head, the CB2 receptors in your extremities and organs for the most part. And this is a bit of a crude analysis, but rather than taking a pill and hoping it gets to where it needs to go, you can actually target receptors in particular parts of your body. And it's exciting. It's frontier science. We know a lot less than we don't know, right? There's a lot left to learn, but what we do know is very encouraging through the lens of health and wellness.
Fascinating. I mean, certainly sound a very specialized area of investment by the sound of it. So, we've heard a lot in the media lately about, Tilray and Canopy Growth and the explosion of pot stocks, and, it's a popular pick for millennials in their portfolio and this sort of stuff. But I'm assuming they're not the companies that you're investing in, Todd. So I'd like to get an idea from you on sort of what the specifics are. What are you investing in at the moment? Can you give us an idea and some examples of some of the companies that you're investing in?
Sure. So closer to home for you, I mean, we have some pretty good positions in the Australian market. One of them is Elixinol, EXL. We have a large position. That's a CBD and hemp play. We think they're going to be a pretty robust consumer products play. And, it's a very, from a fundamental standpoint, we think it's very attractive relative to some of the other players in the market, whether that's Charlotte's Web, for instance, is an example of another player. But we like Elixinol. We like the management, Paul Benheim. We think he knows his way around the space. So that's one Australian name that we were keen on. A few more. Auscan, it's been under a bit of pressure of late, but so has the rest of the world. But this is a company where you have Canopy Growth owns almost 10%. And we think that Australia is going to emerge as the service station to the Southern Hemisphere in terms of cannabis, particularly maybe for the Far East, Japan, which may not have the land necessary to really cultivate. But we do think that that Australia sits in a pretty unique spot. So we like Elixinol, we like Auscan. Can Group is another one. Can Group is one where Aurora, the Canadian licensed producer, owns rough justice about 20% of that. So we like these stocks. Certainly we're early. We think that Australia is probably 3 or 4 years behind where Canada is.
So that's really interesting, Todd. So when you say, Australia is 3 to 4 years behind, do you mean in terms of the government regulation as well? Is that something you take a position on?
Sure. Yeah. I mean, this is wellness. And as a matter of fact, if you recall back to January, when Jeff Sessions pulled the Cole memorandum, that morning, the same morning, and I'm sure it was a coincidence or not, but that morning, the health minister of Australia and the health minister of Canada both came out and said they wanted to dominate the world in cannabis. And unless the health ministers want a nation full of stoners, we have to believe that they see what we see in terms of the efficacy and in terms of the market. I mean, look at it this way, right? In the entire world, you've got maybe $80 billion worth of global equities, and that's probably, that might even be twice as big as it is. But let's call it 50 to 80 billion of global equities. Cannabis right now is a cash crop, is about $300 billion, right? So if you start to think about and contemplate the optionality of cannabis and hemp as ingredients, right? Not the end product, but rather the input, the active pharmaceutical ingredient in everything from medicine to food, to clothing, to fuel, to plastic composites, to building materials, to pet supplements, to cosmetics and vanity, right? This is going to be ubiquitous. So we think that market looks somewhere to the tune of $2 to $3 trillion in 10 years versus maybe 80 billion of global equities now. We think that has to change. We think we're in the early innings of a secular bull market that's going to be efficacy driven, and that most people just don't understand or have chosen to understand, what they've been told by the U.S. government, which is patently false.
Part of the challenge for you is looking out at the world and figuring out where these businesses will spring up, because I imagine there's a massive first mover advantage, and you see that in the price of Canadian stocks. When you look out on the world, where do you see other sort of really interesting opportunities in terms of decriminalization and regulation and stuff like that?
Well, I think there's a few buckets. Certainly Australia we talked about, but when we look at capital flows, I alluded to it earlier, we see that really through the lens of exposure to the marketplace. So you have 3 stocks that are Canadian majors that are trading in the U.S. That's Tilray, Canopy, and Cronos. And certainly they've benefited from the exposure and the ability for U.S. investors to participate. But if you look at, probably the next bucket, which would be the Canadian majors that are trading in Canada, they're Canadian listed. You're looking at companies that are, trading at maybe a dime on the dollar on a valuation standpoint. Very similar, if not precisely similar profiles on some of these companies versus what's traded in the U.S. So the relative discount, again, speaking to the relative edge of going downstream where there's less liquidity, you're going to find more of an edge. So we see it as U.S. listed Canadian majors, and then really Canadian listed Canadian players and the mid majors and such, and the periphery that we talked about, some of these laboratory and extraction plays. But where it starts to get more interesting for us is in the U.S. names, because institutions can't buy those. So it's one of those rare opportunities where you can actually go out and front run an institution. And there's some good companies emerging in the U.S. that are going to be real players. I mean, Florida's patient count is already half that of all of Canada. This is a real market that's about to really take root. So we think the U.S. side is probably a pretty good risk reward, but we think the real frontier is biotech. And nobody's really even contemplated the notion of cannabis biotech because they don't understand the science behind it. And there's very few people in the world who do understand the science. A few of them happen to be on our board of advisors, and one of them happens to be my partner in this business. So I feel like we have a pretty good moat around that. But certainly you'll see more and more of that in the coming months to years.
I just want to pick up on something that you mentioned there, because a lot of our listeners might be wondering. So you said that institutions can't buy US listed cannabis stocks. Do you want to just explain why that is the case and what that means in terms of your opportunities?
Well, it's still a Schedule I narcotic. So in the eyes of the U.S. government, there's no difference between heroin and cannabis. It's like I said, it's an agenda that's outdated. It's pernicious, and and I believe, in my humble opinion, the U.S. government has blood on their hands for holding this kind of hostage for the last 80 years. But nonetheless, most people still think this is a gateway drug as opposed to a solution that's an opioid terminus, where 25% less people are dying in states where this is legal. But for the most part, U.S. institutions, they won't touch this. You'll see the Canadian names, the names that are listed up in Canada. The front page holders include companies like Vanguard and BlackRock and State Street, the big institutions. We think that same appetite is going to flow to U.S. names. They can't get involved yet because of this federal scheduling.
So what does that mean if a US listed company was big enough to become part of an index? Would that mean Vanguard and those index companies would have to exclude them?
No, because right now the only names that are listed on the US are the biotech side. Anything else is listed up in Canada. So, we just think that this is a in the process of coming online, and it's going to be massive and it's going to be global. So we see it as an outside-in kind of evolution and an inside-out evolution, meaning we're seeing other countries adopt almost, at a steady pace now, and then we're seeing states continue to adopt. So this is going to kind of come to a head at the U.S. border, but we actually think that you're going to see cannabis decriminalized and left as a states' right issue as it should be. And we think that's going to be, a lot sooner than a lot of other people in the space seem to think.
So can I just ask about that? Because obviously Donald Trump is your president and Jeff Sessions is your attorney general, and Jeff Sessions has traditionally been extremely tough on drugs. But you just mentioned there you think it will be decriminalized and be made a states' rights issue sooner than people expect. So how does that work with the current administration? Yeah,
well, I think we all owe a pretty tremendous debt to Jeff Sessions and Donald Trump, because without them, these prices would be a lot higher already. I happen to think that that Sessions is I don't think, the word on the street is he's going to be out by on the other side of the midterms. Good riddance as far as I'm concerned. But I don't think this is the last bipartisan issue. It's 93% support in the constituency heading into a midterm election. So we think that this is going to really this is going to take care of itself in the not too distant future. But to your point, we wouldn't have been able to accumulate the type of exposure we have if this was a different administration that had a more favorable outlook on cannabis.
So Todd, in a Real Vision interview, you said that you saw hemp as a renaissance and farming 2.0 for American farmers. Can you just explain what you mean there, and maybe for our listeners make the distinction between marijuana and hemp?
Sure. Well, hemp is probably the most agile crop in the world. You could really make, and again, you have to view these cannabis and hemp as an ingredient, not as an end product in and of itself. One of the things that we get a lot of pushback on is people always say, well, the prices are going to go down as more people come online, more countries come online, and we just think that's great. That's akin to saying Anheuser-Busch, would complain about the price of wheat going down. that's not the case. Cannabis and hemp are ingredients, and hemp in particular, which is right now the source for CBD, but also, again, very agile. I mean, everything from clothing to food to building materials to plastic composites to, you name it. This is going to be this is going to revolutionize, I think, the way we framed it as farming 2.0 or renaissance. We think this is really going to, drive a lot of revenue, a lot of jobs, and certainly, be a tremendous industry in and of itself. So we think that that's an inevitable, evolution on the farming side. But we're not looking to play cannabis through the lens of a farmer. We're looking to play cannabis through the lens of that it's an ingredient, right? The margins are going to be on the back end, especially as prices start coming in. So, the way to look at it is to say, okay, well, if you wanted to, and we think cosmetics and vanity is going to be pretty big, but if you wanted to, buy cannabis hemp bombs, THC infused hemp bath bombs, rather, you're going to be able to charge a pretty penny for that. And you start talking about the cosmetics and the vanity in those applications, and we start to hear more about the potential for some of these creams to remove wrinkles. I know it sounds a little pie in the sky, but trust me when I tell you that this is coming. We think that the tail on those consumer plays is just going to be pretty significant. So, you're seeing it right now. We talked about this a couple of years ago, how the buy build was going to move from spirits to tobacco to healthcare to consumer packaged goods. And, we're pretty much there. You see Coca-Cola kicking tires, you see Philip Morris kicking tires, you see Constellation with the $5 billion infusion into Canopy. We just, we still think that healthcare has got to, big pharma's got to turn buyer. And once they turn buyer, we think it's going to be a pretty powerful catalyst for the space.
Yeah, that's really interesting. And I guess it is something that all these pot stocks will have to watch for, because big pharma has so much money, it has so much lobbying power. Have you really seen them enter the space in any meaningful way, or lobby against this in any meaningful way, or is it sort of too small and too early for them to get involved?
Oh, they've lobbied against this for sure. They've I think we've seen estimates where there's estimates that this will take $4 to $5 billion off the top line, like right out of the gate. But I think that's just the beginning. When you talk about some of these minor cannabinoids, and obviously CBD gets a lot of play, and THC gets a lot of play, although that's been demonized. But there's hundreds of cannabinoids as far as people can tell. Nobody knows for sure because, again, the research is so difficult to come by. But, you're talking about things like CBN, which help with sleep. It doesn't have the side effect profile of an Ambien. We just think that this is going to be tremendously just disruptive and ultimately just a tremendous benefit for society to be able to address your medical concerns with a more de minimis risk side effect profile. I think is just that's good news for everybody except for potentially big pharma.
So just to pick up on something you said there, you said the research is really hard to come by, and I imagine part of that is because it's still a Schedule 1 drug in a lot of countries. Is there anywhere where there is a lot of research happening, and where our listeners can go to see the sort of cutting edge of research in this area?
Well, Israel's been working on this for a long time, and Spain and Italy. There's a handful. Again, you could probably fit all the people who really understand the science on the head of a pin, which is both a good thing and a bad thing. But we've built, we have a website, cb1cap.com, that we actually built a repository because we had gotten so many questions about the indications and the potential indications. And again, there's been a lot of work done on the endocannabinoid system, which is what we on our website, CB1cap, we've taken a deep dive into. But as we look out, there's really not a lot of work that's been done on the phytocannabinoids because of the research. So the parallels between the endocannabinoid system and the phytocannabinoid profiles still leaves a lot of work to be done, which is why I think the Western medicine is so suspect of this. They still think that this is snake oil. We've had these conversations with these big pharma analysts and these biotech analysts, and they think we're crazy. We tell them what we're doing knowing what our thesis is, and they look at us like we have four heads. People don't know what they don't know. If you're not studying this in medical school and you're a doctor, I don't blame them. I would have the same reaction, in that I would know this. I spent, 100 years in medical school. I would know this if there was something there. But because it was a Schedule 1 and because the endocannabinoid system is a relatively new system through the lens of health and wellness, again, people don't know what they don't know.
So Todd, based on what we've seen over the last 6 months on the market with Tilray and Canopy Growth and those sorts of companies, we've got to ask: do you think we're in a pop bubble at the moment, or is it just getting started?
No, I don't think we're in a bubble. I think certain stocks are probably ahead of their skis, and that's just a function of the investment. The investment community not really knowing sort of the particulars or how to value this. Wall Street doesn't cover these stocks, right? You have a couple of guys in Canada that are pretty good, but everybody's pretty much learning as they go, and they're basing, in my opinion, a lot of these valuations on the discretionary vice valuation, which I get, right, because that's going to be a huge market. But I don't think efficacy is priced in. I'm pretty confident, based on the price action of a lot of our holdings, that people haven't figured this out yet. But certainly that's going to change. It's changing very quickly now, but people are going to better understand that this is actually a good thing, that 9 out of 10 cannabinoids are not going to get you high, but they are good for you. They're anti-inflammatory, and this is something that's going to be leading to people living much healthier lifestyles. So, that chasm between perception and reality is really where I think profits are. And right now, the chasm between perception and reality is still rather wide when you see these analysts talking about cannabis and using Cheech and Chong images to kind of convey their point. We chuckle because, for as long as people continue to think that this is a gateway drug, there's going to be a pretty significant arbitrage in the marketplace.
So, Todd, you've just given us all a lot of information, and for a lot of our listeners out there, they may not have really been exposed to cannabis stocks before, so it might be a lot of new information for them. So for the beginner who's now interested in this area, where do you think is a good place to start looking and to sort of dip their toe in this pretty immense pool?
Yeah, no, I wouldn't get to know the space by investing. I would get to know the space by researching. And certainly, we try to educate as we go. We offer a morning recap and a weekend recap of all the news in the space. You can sign up for that at our website as well. We're not charging for any of this. We think it's a pretty important protocol for people to better understand. And, so we're out there telling the story. There's a handful of other people, I think, online, whether that's on Twitter or elsewhere, that do a good job of trying to frame this for what it is. But we're still in the very early innings of understanding this. And obviously, a lot has to happen still. This has to go through the clinical pathway, at least in the U.S., because A, that's the only way the U.S. government can tax it, but B, this is going to be medicine prescribed by doctors covered by insurance, as much as it's going to be drugs from state dispensaries, right? There's going to be two markets. So it's just really understanding what this is and knowing how to frame it and understanding that we're still very early. So, it pays to do the work as opposed to just jump in and try to pick the stock that looks good at the moment.
Yeah, some great advice there, Todd. So moving away from cannabis, and just very briefly, we always like to get our experts' opinion on the current state of the market more broadly and more generally, and particularly with all your expertise from your time on Wall Street. We'd be interested to know briefly what you see happening in the markets at the moment as a whole, and do you have any major concerns, or where do you see things going over the next sort of 12 months or so?
Yeah, that's a tough question. I think, you talk about me being an expert in cannabis. I'll correct you and say there's no such thing as an expert, right? There's a lot of explorers. There's a lot of pioneers, some of whom know more than others. Certainly, we like to think we're pretty well informed, but this is a frontier, and we're still finding our way. So insofar that there are any self-proclaimed experts out there, I would be very wary of what they're trying to sell you. But in terms of the market, I wish I had a crystal ball and I could tell you this or that or the other thing. It's a function of time horizon, right? It's a function of a lot of lot of variables that haven't played themselves out yet. I do think that that this market for an extended period of time was given drugs that masked the symptoms rather than medicine that cured the disease in the form of central bank assistance and low rates. And if you believe markets are free, then you believe that it's never wise to mess with Mother Nature, and I think we're seeing a bit of that now. But as I said about or as you said earlier with that quote about standing in a circle shooting at the same stocks, I'm less concerned about the market. We use it as a hedge more than anything. But I think the best risk reward that I've ever seen in my 30 years on Wall Street is right here in the cannabis space.
So, Todd, to wrap up our interview, we always ask every guest the same final 3 questions. So we'll get on to that. And the first one is, what book or books do you consider must reads?
Well, 2, I would say. One of them is Man's Search for Meaning, which is Viktor Frankl. And the other, I would say, is The Energy Bus by my friend Jon Gordon. Both of which are very good, totally different reads, but that's okay.
So we'll add them up. So number 2, where do you go to get your market information?
It's another good question. Well, we do most of our research, I should say we do all of our research in-house because there is no Wall Street research, very, very limited Wall Street research. You have the Canacords of the world and the GMPs of the world and a few others up in Canada. I know, some of them have a presence in Australia, but this is a brand new space, in terms of the market. I've been doing this 30 years. You find your 2 or 3 or 4 people who you sort of have built a trust and respect for, and at least I do. I try to factor their thoughts into my thought process. But at the end of the day, we each make our own decisions because we each have to live with the results of those decisions. There's a lot of noise out there. I can tell you from having been in financial media that there is a coordinated agenda to get you to click or to open or to read or to watch or to interact. And if there's not, then they're probably, in the case of some of these social media companies, listening on your smart device to what you're saying and doing. I mean, if you don't know what the product is, you probably are the product. But in terms of the market, I have the handful of people who I listen to and I pay attention to on Twitter. But other than that, we do our in-house research. Yeah,
nice one. So, final question, Todd, and this is what we end all our interviews with. If you could go back to your early days of investing, what's one thing that you would advise your younger self?
Other than to take care of my teeth?
That's a good one.
I would say that it would be to find yourself a Sherpa or a rabbi or somebody who you trust who's going to protect you, and build that trust and stay close to people who are going to, who you think, you can trust, because this is a pretty cutthroat business. Everybody's out for themselves. And if you could find a few people who watch your back while you watch their back, I think you're going to, the sum of the parts is going to be greater than the whole.
Interesting. Well, that's going to be my plan today. Go out and find a Sherpa. So,
you might have to go to New Zealand for that.
Across the ditch. Todd, that brings us to the conclusion of our interview. Just want to say a massive thank you for coming on the show today. It was great to finally connect. You've given us a fascinating insight into the world of cannabis, and particularly an area that is not so discussed in the media, and for the beginner investors out there, it's given us something to go and research further. And with Australia being the service station to the Southern Hemisphere, I think it's going to be a sector that we'll sort of closely watch over the next few years. So really appreciate you coming on and sharing your knowledge with us. So appreciate your time.
I appreciate you, gentlemen. You have a good day.
Thanks, Todd.
Thank you. Hello, mates of Equity Mates. Or I guess that just makes you Equity Mates. Anyway, it's Bryce here. One of the most frequently asked questions we get is, where do we find information about all these stocks, and where's a good place to start? Now, we could do a whole episode on this, and we often do touch on it, but the best place to start is by signing up to our Thought Starters weekly email. Each week, we send you some cool stuff that has caught our eye during the week, as well as some more detailed articles on stocks and invested-related content. We also include Basics 101. These are articles tailored specifically for beginners to really propel you on your way. We don't spam you. I mean, we hate spam. It's once a week and there's enough stuff in there to occupy you for a full day of browsing at work. Now, Ren puts a lot of effort into finding quality articles for you guys, so if anything, just sign up so he feels the love. Head to equitymates.com and chuck in your email at the bottom of the page.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.